Good afternoon, ladies and gentlemen. Thank you for taking time to join us for today in our Expanding Your Business series. And for today, we'll be looking into India, and India, the land of opportunities. And I'm very, very excited today to be joined by three of my very esteemed speakers. And before I hand over the session to them, let me just maybe quickly take everyone through why we are doing this today. My name is Ruben. I'm the Chief Operating Officer for Singapore FinTech Association. Now, India is a huge market, I think that everyone knows. I just want to give you a quick overview as to why it's such an important market and how valuable today's session is in helping in your business. On a government-to-government front, G2G, it has already been announced since last year that India's UPI, Unified Payments Interface, real-time payment system will be linked to Singapore Pay now come July 2022. Which what it means is that the implications are so heavy and so serious, because what it means is that come before Christmas this year, all of us will be able to just transfer money at a touch of our mobile phone to someone in India just like that. You don't have to queue a remittance. You don't have to go to a bank and make any more transfer. It will be so synchronized to the point you can make real-time money transfer. And that itself is huge, ladies and gentlemen. And if I were to take it down one level now to the commercial and to the industry, according to Economic Times report in Jan 2022, India financial services in 2021 is estimated to be at $500 billion, while fintech market comprise only about 31 billion. And in the next 5 years, fintech is expected to grow on a CAGR of 22% and currently just stands third largest fintech ecosystem, just behind US and China. Now, phantom this, we are talking about a market that is so big that's just only behind US and China, and it's just right or about 4 hours to 6 hours flight away from Singapore. And India remains but all that said, India remains a very untapped market due to the lower penetration of financial services. The report goes on to share that there's about close to 15% of India's population that remains unbanked, and that's a huge number based on a 1.2 billion population. And only about 20% of SMEs have credit access, and while insurance penetration remains low. I said a lot so far, and I hope that I shared with you enough to know why today's session is so important, because we all agree that there are a lot of opportunity in India, but now we need to find out from the experts on how do we seize that opportunity and how can we then go further in. Now, without further ado, let me just take you through quickly today's agenda and the speakers I have with me. These are all very, very good and strong speakers. What we'll do is, for a start, that we will share with you on basically what are the opportunities for fintech that you have right now in India, as well as what are kind of the best models that you can look at to enter a market like that. And also our expert will also share with you on how to really look at India, because India is a huge country. You can't really just look at India as one country as for mode of entry. They'll be very erroneous. But at the same time, after you identify the opportunity and after you decide that I want to do business there, the next step is then how do I then go about doing it? And that's where all the regulatory framework, the licensing, as well as the kind of structure and the kind of permits that you need. And then that's where we have another group of experts here to do that. Now, on the very first part, I'm very proud to share with you that we are from speaker today. We have Mr. Saubhar Tripathi. Mr. Saubhar Tripathi is the chairman for Federation of India Chamber of Commerce and Industry FinTech Committee, and his day job is actually a senior partner and director from Boston Consulting Group that looks after the APAC regional practice for financial institution. Now, gentlemen, ladies, this is a very, very strong speaker that we have here today, and I do hope that I'm very sure we'll benefit a lot from him. And after that, for the regulatory and the legal aspect, we have our friends from Syria Amachan Mangalas. Guys, CAM is one of the top law firms in India. We don't get that a lot, getting such strong law firms sharing insights with us. And I'm very proud to say that we have Anu Tiwari, who's a partner at CAM, as well as Vivek Kapalia, who is the managing director and CEO for CM in Singapore itself, and he's actually physically in Singapore and able to practice India law. Right. So without further ado, let me just start off by hand over the floor to Saubhar, please.
Thank you very much, Ruben. Good afternoon, everyone. It's a great pleasure to be here today and presenting on behalf of Vicky. Could I just check with you, Ruben, if you can hear me all right?
Very good, my friend. I can hear you.
Fantastic. Okay.
And we can see your slide as well.
You can see the slide as well. Thank you.
Very good.
So much. So I have 15 minutes to quickly summarize the opportunities in India. That's a tough task. I will go through a set of ideas here, try to capture the essence of what's going on. Recently, we published a report, we called it the Poster Child, and the idea was that given the kind of changes that are happening in the financial services landscape and the regulatory stance towards fintech, we believe that India will be and could be a poster child of how banking sector in uh, different economies can actually evolve. And over the next few minutes, I'll try to bring that to life through this couple of charts that I will show. So to begin with, Ruben mentioned UPI. I think let me start with that. I think India does not get always very favorable press from the global media like The Economist, but there's one place where there has been universal acknowledgement of the fact that something quite extraordinary has been achieved with the implementation of Universal Payment Interface, UPI, at scale. And what it has done is, as you can see on the charts, that the ticket size of transactions, digital transactions, has dramatically dropped over the last few years, and the number of transactions has gone through the roof. Many of the banks had to, change their IT systems to accommodate the huge demand that came. And something that is not got so much of press so far is a parallel transformation that is taking place, which is that the small merchants are adopting QR codes for accepting digital payments instead of the POS machines that they used to have earlier. The POS machines are costly and it used to come with its own economics, which was not always favorable. But now there's a dramatic change, and even the small merchants are accepting digital payments through QR codes, not very different from the way you would see this in China. And so for last 1 month, I've not had a single currency note in my wallet because, people can get by. Of course, I'm in Mumbai, and slowly this is penetrating in the smaller towns. But what it is also implying, and which is very important for, I think, the audience here, is that it is not just about digital payments. It's actually about data, because all of these small merchants in the country, small businesses, are then accumulating a lot of digital transactions on their bank account statements and having a very thick file, as it's called in the credit parlance. And we have also established that bank account statement transaction analysis is a very, very powerful source, and it complements the bureau in a very good way. Indian credit bureaus are one of the best in the world in terms of their coverage and the technology. So they've already had a very phenomenal impact on the credit penetration in the country. But we feel that when it comes to small business credit, which is, Ruben also mentioned, is a very big gap and an area that is going to be focus of a lot of players. We believe that UPI is going to make a big dent that by provision of data. So over the next few years, we'll see every single customer's file, bank statement will be 8 to 10x thicker, and hence a big opportunity for financial institutions and fintechs supporting the financial institution to really create models, to create business models to facilitate credit to small businesses. And apart from this, there is another thing that is started to happen, and next few years it will be a big deal. It is what is called aggregator, which is India's version of open banking, which is being rolled out, and it has kicked off with some new licenses being given out. And what is envisaged in the future is that any individual customer can give his or her consent for her financial information from a range of financial institutions to be provided to anybody of her choice. And that doesn't have to be a bank. And this is basically to promote fintech innovation in a very big way on the lending side. It has been, so far, fintechs have been quite active, but they have had the handicap of lack of data, and we believe that that is going to dramatically change with this power in the hands of consumer to give the consent to not only transfer data, all their data, one time from their institutions, but actually even periodically and so on and so forth. And hence this data can be used not just for one-time credit assessment, but actually credit monitoring and collections and so on and so forth. So it is a game changer. And we expect, the data per customer that's available for financial institutions to go 100x. And all of that at a drop of a button. It's machine readable. So a lot of frictions are going to go. So we are set to see quite a dramatic transformation in the credit landscape in the coming days, and particularly on the small business side. And financial institutions are not ready for it. They need support. And that's where the fintechs come in. And it is also interesting to highlight here that the law, the data protection bill, um, is also on the anvil, which will provide a more legal framework for data protection. And there are certain technology solutions also being proposed to address some of the concerns around privacy. So some of that is a very big theme going forward. Another very interesting thing to recognize in Indian context is that over next 3 to 5 years, this is the kind of framework that is coming together is captured in this page. You've got banks at the bottom, as you can see. You can see on the left-hand side, the payment service provider. So already, most of the UPI payments are not initiated on bank platforms. They are initiated on third-party platforms like Google Pay, PhonePe, and a few other entities which are not banks. Actually, they are unregulated entities. And that is the direction in which regulation is moving, to provide the customers with an ability to get their service on non-regulated fintech platforms or big tech platforms. And today it is payments, and it is expected that at least a significant portion of unsecured lending will also move to a different framework, loan service providers, which are unregulated, but which can then link into the banking system through another protocol called OCEN, and then similarly on other aspects of banking requirements, which deal with personal finance management, wealth management, advisory, and so on and so forth, already starting to happen in some form. It is possible actually even today in India for me as a consumer to get all my financial services from non-bank platforms, with bank being called upon through APIs in the backend. And all the information that I have with the banks actually through my consent being passed on to the service providers that I'm facing. So this is a vision of the future to which the ecosystem is moving. There is a broad regulatory blessing to it. There is a broad support from the political establishment because of the appreciation that it leads to development and of the banking system, but also better quality services, because a lot of innovation takes place on the customer front end, while risks are controlled because fundamentally our transaction takes place only in the bank systems, right, which are heavily regulated. So this is where it is heading, and the layer which sits on top of all these protocols, it is fintechs are most welcome, and that's where we see a lot of activity taking place in times to come. And here is some data which we may not have time to get into today, but by and large, as you can see, the darker shades are the proportion of the services which are initiated already in non-bank platforms. So the first chart is retail digital payments. Today, 45% are initiated on non-bank platforms. We expect it to go to 75%. Similarly, unsecured digital lending. Today, 35% is initiated on non-bank platforms. That's going to go up. And even digitally opened savings account, today about 5% are open on non-bank platforms. So this is where we are heading. And then we also have a similar thing on the corporate side also. I think there's a general realization in India that large ticket lending on the books of the banks is a thing of the past. And even though there's a lot of investment needed for climate transition as well as for infrastructure development, most of it is going to be supported by wholesale credit. And hence, financial institutions are going to focus more on ecosystem solutions for different industries, value chain solutions for different industries, and providing embedded finance as a part of those ecosystems. And there again, partnerships will have to be quite critical. And what I'm showing on this chart is that a majority of the corporate debt, which is bank-led today, is almost going to become 50-50. And the thing that will remain on the bank books is all going to be more driven by embedded finance solutions, industry specialized solutions, which are techno financial in nature. I would also like to bring to attention this unique new thing that is being started in the GIFT City, where we have got a new regulator, International Finance Authority. And this regulator is a combination of banking regulator, pensions regulator, insurance regulator, all powers into one, right? And with the idea that in this offshore model, one can really support development of new types of fintech who could experiment with business models which are not possible on the mainland, but can then be transferred. So there are a lot of hackathons which are already been initiated, and you can see from some of the examples mentioned here that is quite forward-looking, very advanced, and there is a lot of opportunity here to really pick up very advanced models for experimentation on how it can work in the Indian scenario. I'm just, in interest of time, going to move on with just one or two quick points about the Indian fintech market. I mean, as you can see on this chart, the fintechs in India are quite, broad-based, in terms of lending, payments, investment tech, and so on and so forth. As you can see on the right-hand side, a lot of valuation has been, attracted by the payment segment, but we believe that is going to change. So here we believe that you can see on the right-hand side of this page, you can see as we stand today in 21, a large majority of the valuation is driven by payments, fintechs, but we expect it to change, and it will shift more to lending and investment technology. Payments will stay, but some of the developments here are going to change the nature of the value creation that's going to take place. So this is of a very interesting relevance for us. A lot of fintechs in India are also quite interested in expanding abroad, and our recent survey showed that about 70% of them are keen to look at Southeast Asia as an opportunity market. So that may be of interest to some of you. I'll just end with this one last page of, if you were to think of Indian financial sector, the banks in particular, what kind of areas they are looking for help. And they are looking for, and we work with a lot of them, we realize that customer acquisition or customer service improvement opportunities, customer engagement and deepening of relationships, credit and collections analytics, end-to-end process digitization, improvement in tech stack to have more appropriate API framework, integration with ecosystems, and then for cyber are top of mind of the financial institutions. And there is openness and willingness, keenness to find ways to work with the fintech community to either integrate their solutions or to participate in other different models to address some of these issues, take better products to the customers, but also strengthen the core service offerings themselves. So let me stop there. This is a very broad topic to cover. I tried to give a broad brush idea of what we expect to see going forward, and we look forward to discussions.
Thank you, Saurabh. Thank you very much for this very insightful sharing that you have presented earlier. And there are just a couple of key points that I'd like to call out and just re-emphasize that to our audience today. And these are, as follows. Saurabh has mentioned that there's a trend where there's increasing in volume transactions, but there's a 6 times decrease in the ticket size. This is very significant because this exactly opens up the market for fintech, where you need technology solutions and the adoption in order to capture this opportunity. Because with this change in consumption pattern, if the technology is not up to scratch, you will not be able to fulfill the demands of this requirement. And secondly, is really how much small merchants have been adopting QR payment. Saurabh has given us very, very clear stats with that. And I think that is very important because as he has mentioned himself, that he doesn't hold fiat cash anymore. And that is quite unbelievable, because in Singapore I'm still holding fiat cash, so imagine India is more advanced than us in this respect. He has also called out the account aggregator. This is going to be a game changer as well, because even in Singapore, as you're working towards similar open banking steps, I think this is actually a place where we have seen how India has kind of supersede and leapfrog this opportunity, so I think in that sense, players in Singapore would find that there are a lot of these great opportunities through account aggregator that's being presented right now. Saurabh has also called out a very key important trend, embedded finance, and this is also a trend that we observe in Singapore for the next 1 to 2 years. And I do want to call it out because there are more and more players in Singapore that are providing embedded finance solution, where if Saurabh has also called it out, that it's actually very, very prevalent right now in India. So I do see opportunities in this respect, and I think what's important is that later on, as you go through our friends in CAM who can share with us on this regulatory climate, on how this kind of embedded finance solutions company can see fit through this framework, this legal framework, I think then there will be a lot of opportunities as indicated by Saurabh earlier. And last but not least, Saurabh has shared with us what the Indian banks are looking out for, those 8 key points. Unfortunately, I'm so sorry I didn't memorize those 8 points, but I think what's important is that the decks will be shared, the video will be recorded, and do take note of those 8 points, because to our audiences, if you fall into any of these 8 components and you would like to find partners, do let us know, because we have FICCI, the Federation of India Chamber and Commerce and Industry, who will be able to support us to then lend help to help you find the right partners in these spaces. Now, thank you guys. Now, without further ado, let me hand it over to Vivek and Anu, please.
Thanks, Ruben. Thanks, Saurabh, and hi, Anu. So again, thanks to SFA and FICCI for having us, Cam, join you guys. Very interesting presentation, Saurabh. It gave us, even for lawyers, it's sometimes good to see non-legal slides, and that's one of the reasons we don't have any slides. I'm going to just start off by saying, from my personal perspective, having spent 15 years now in Singapore, and I travel back to India very, very often. Pre-pandemic, it used to be at least once a month. I have seen the kind of leapfrogging that India has done as far as adoption of technology is concerned. So the reason that you're able to see all these new innovations in payments, digital lending, and as Saurabh was saying, smaller ticket sizes, massive volumes, is also due to the telecom penetration that India has gone through over the last few years. It's been happening for a while, but now we have about 800, 900 million mobile connections. Almost every part of the country is internet connected. Then you had this massive rollout of bank accounts for 500 million unbanked customers all across the country. And if you just roll all this up with then the UPI and the other kind of the India stack, different technologies that are being put in place, the fundamentals are all there. The market is there, the ability to transact is there, and therefore India has always had this uncanny kind of way of leapfrogging. We did 2G, and then 3G was not very thing, and then we leapfrogged to 4G. And so stuff like that. So now coming to the very briefly, Anu is the real expert here. I'm just going to give you some of my perspective from a Singapore looking into India perspective. For fintechs in Singapore, if you're considering to invest in India, to do a joint venture in India, to license your technology to India, or to license out technology, or even to partner with Indian companies who may be globalizing and going into Southeast Asia, there are, of course, a host of rules and regulations that you will need to be aware of. But having said that, if you're a pure technology fintech, from a foreign investment perspective, it's very, very simple to enter India. In fact, these days, it's easier to open a bank account in India for a foreign investor who sets up a company than for a Indian company in maybe other parts of the world. So India has very liberal entry strategies and entry rules under our foreign investment laws. We have exchange controls like China does, but at the same time, like we did with technology, where it was very light touch, fintech or tech fin, as long as it is out of the deposit taking or the lending, where you're actually handling money, it's a fairly simple process to enter India, do joint ventures, license technology, and stuff like that. You then obviously have the other bunch of fintech regulations in the country, which are currently, other than what you see in the International Financial Services Center that Saurabh spoke about, they're broken across various regulators. So whether it's the securities regulator, which will look at stuff which is more akin to mutual funds, or which are now being offered by fintech platforms, or if you look at the bank RBI, which is looking more at deposit and lending, and so wealth tech, etc. So they are a little dispersed. The insurance regulator is different. So when you have insurance aggregators, you have those sets of rules. But these rules are not very, I would say, cumbersome. There will be requirements for players in these specific areas to seek either registrations or approvals whilst they're looking at setting up business in India. But the innovation is quite fast and progressive. and even the Reserve Bank of India, which is the equivalent of MAS, has actually set up a fintech department. Just to put things in perspective, we had fintech in India for a long time, but it was dispersed even within the central bank. Now there is a dedicated department that is going to look at fintech, so that for example, it's a joint working group with MAS, Singapore India joint working group on fintech, is actually one of the results of that. Ruben, you mentioned was the Pay Now UPI money transfer that we're all looking forward to, is actually a result of the joint working group between India and Singapore, spearheaded by RBI and the MAS. So the regulatory framework in India is evolving across all these areas. Obviously, financial services traditionally are heavily regulated in India, and to the extent that those financial services are deposit and lending related, you will need to meet the regulatory requirements. But otherwise, I think the field is quite open from a India entry strategy. Couple of quick points before I hand it over to Anu and Ruben, if you have any questions. Currently, there are no restrictions from a foreign investment perspective in most of the pure technology spheres. But the minute you are getting into areas like insurance or the securities kind of market, whether it's a mutual fund tech or it's wealth tech, then you are advised to get advice on whether there are any foreign investment related rules and regulations that you need to comply with. They may be related to the amount that you can own in an Indian company or a joint venture. They may be related to other types of restrictions, resident directors, security clearances, and various other things. So bear that in mind. If you are somewhere in between technology and financial services, and you might be more a financial services provider than merely a technology provider. So that's one part. The second part is that from an exchange control perspective, today there are certain temporary measures that India has put in place, and I won't bore you with the details, but these are more relating to investments that are coming from countries that have shared land borders with India. So if your investors come from any of these countries, so if you have a Singapore company that has investors from any of these countries with whom India shares a land border, and there is a definition for beneficial ownership, etc., I won't bore you. You need to seek government approval. So all I'm saying is that you need to ensure that you are able to figure out that whether your product service is regulated, unregulated, as Saurabh was saying, a lot of it is currently unregulated, and then decide how you enter the market, in what form of legal form you enter the market, and whether you need any approvals or not. So I'm going to pause there, and Ruben.
Sure. Thanks, Vivek. Before I hand over to Anu, let me just put one question to you then. Being in Singapore for the past 15 years, what do you see? I mean, I didn't ask you what's your favorite dish in Singapore, but perhaps what I'm going to ask you next is more of, from your experience, especially in the field of fintech, what are some of the business mode of entry in India so far? And from a regulatory standpoint, is that the best way forward? So it could be going on the own as a sales rep office. It could be going on a sole prop. It could be going as a joint venture, or just on a collaboration agreement basis as sign off in Singapore. So what do you think is, from your experience so far, what is the best way to, and what has been the common way of entering? And is that the best way, or could there be a better way?
So let me just answer that slightly differently, Ruben, if I may. If you look at where has all the money come into fintech in India in the last few years, even today, it's payments, right? Payments has been the largest value grabber globally. And therefore, if you look at payments, these investors, 90% of them are foreign investors. Private equity funds primarily all over the world, a lot of them investing through Singapore. So one chunk of investment that goes into India, into these fintech, is pure financial investment. It's not strategic investment. Historically, you have seen a lot of private equity money go into fintech. Now what we are seeing is that there is digital lending, and let's say wealth tech and insurance are going to take this space away from payments, where payments commanded the largest valuations, therefore attracted the largest investments. And when you have this phase, which we are now entering, you will see most, apart from financial investment, obviously, but you're likely to see more strategic investment. So if you have, insurance companies in Singapore, or Singapore is a private wealth hub, if you have wealth tech companies in Singapore wanting to enter India, you will see a lot of those strategic investments. When you see strategic investments, then you need to answer the question, how do I enter the market? if you're entering the market because that's your market and you want to sell your product or service there, then obviously you need to be in the form of a corporate entity, right? It should be in the form of a private limited company, similar to what you have in Singapore, or you enter into a joint venture with an Indian with an Indian partner. So this is the most flexible structure that you will have in India, similar to your PT Limited in Singapore, to do business in India. If you're entering India in the beginning just to scout the market, to do some reconnaissance work, then you can look at a slightly easier forms of entities like a rep office, just to figure out what's going on and then send that information back to Singapore. So all these options are available, very similar to what you have here.
Thanks, Vivek. Now, before I head over to Arnold, sorry, Arnold, just one more question I want to pose to Saurabh. Saurabh, in your opinion, as you have both Vivek and Saurabh have called out that wealth tech payments, and especially that you feel these are the kind of trends that are available right now, and we have a lot of these players in Singapore. How do you think they can then potentially work with someone? Do you think is it going to be a competition kind of approach, or do you think it's going to be there's a possibility in collaboration? And also, I want to be a bit more specific here in terms of the market, because India, we keep talking about India as a country. While I guess there could be federal laws, and maybe we can let Anu share more about between the difference between federal law as well as the state laws. But in this case, how do you see the market for payments for wealth tech, and how should they enter, and which markets, which cities, or which states you think will be a better option?
Thank you, Ruben. As far as I'm aware, and Vivek and Anu will correct, but I think India is one market. So in financial services, you don't have state-wise, city-wise, or any such type of thing. So once you come to India, you can offer services everywhere. So that's one good thing, actually. Now, I think depending upon the product and service, the operating model with which one can participate can vary. To begin with, India has a lot of banks. Some of them are technologically very advanced, others are not. And the first port of call would probably be these financial institutions, because they are increasingly alert to the fact that they have to work with fintech to enhance their product offering or to improve their services. So some of the fintechs will have products which or services which can be incorporated into the processes of the banks. So they are not B2C, but more B2B offerings, and it will be a direct discussion with the financial institutions in India who would be. I've seen many of them work with service providers abroad. If the intellectual property that comes with it is quite powerful. So that's definitely the first port of call in my opinion, including the B2C offerings as well. Obviously, we need to be cognizant of the model around data privacy and so on and so forth. But even institutions just purely outside the country can actually partner and support. Now, on the other side, when it comes to partnering with the fintechs already in the country, I am noticing pretty healthy M&A activity going on. And I suspect that as the free flow of capital into the country for fintech slows down a little bit, I think only it's going to accelerate. And that should give a lot of opportunities for mid-sized fintechs in Singapore to consider, appropriate candidates in the Indian landscape to partner with, to acquire, to merge with, to create a much broader footprint. So that would be the second thing that I can sort of immediately come to mind.
Thanks, Saurabh. Now, Anu, thank you for waiting. We leave the best for last. Anu, over back to you.
Ruben, firstly, today is one of those Murphy's Laws days. Whatever had to go wrong with dialing in went wrong at my end. So sincere apologies. And then you give up at a point trying to, and then you just use your phone to dial in. So my sincere apologies. One of my fondest memories of leaving the country last time was for Singapore FinTech Festival of November 2019. When the world was physical, I'd spent a week, and I recall I was being told, why are you going to Singapore for a week? Because normally from India, you go for a couple of days, right? but just the experience of the SFF. And I recall we tried to, and I worked with the India FinTech Association to try and create the same thing. And we had planned a physical event and then COVID hit. So it became a digital in 2020. But to take a step back, India, Singapore, I mean, not a day goes when, and in quick background. So I've been doing this for almost 16 odd years. All of the, the regulatory, the tech, the platform, the large tech, and fintech as a definition is always dynamic, which is unlike the e-com or ride hailing or other services where you can very narrowly pigeonhole the service, and which month of the year you pick, the definition keeps changing. But not a day is going nowadays when we aren't engaged with Singapore clients, both outward, inward. So let me break this into, for the interest of efficiency, into two parts. Firstly, India, Singapore, what we've been seeing, and second is why India, and in turn, why not Singapore for Indian players. India market entry, given how huge the market is, I mean, at some level, the market is a bit of a sandbox right now. Without even having we have regulatory sandboxes, but unlike, say, as I said, a pure play e-com or other verticals in the tech digital space, we as a country we had two moments, the WhatsApp moments of the fintech world. One was the whole demonetization, which happened around 6 years ago, which overnight led to Indians moving to payments. The second was the whole pandemic, where you had to, there was no other choice. And as part of that, a lot of players entered India globally. A lot of Singapore players I've seen entering India in terms of domestic and cross-border, like we talked about remittance, payments, pure play payments. I mean, Singapore is the gateway to enter India. In a way, it's probably the next UK, the way we've been hearing. And given the whole India-US time zone, it fits in perfectly in terms of being able to work with India. So, SF Singapore, I won't say Bangalore, want to feel it's India and Bombay in particular, but probably Bangalore is a perfect triangle in the fintech space. And, as I said, the definition is not just pure play. I mean, I recall 10 years ago when fintech as a word wasn't there, we had the pure play card networks, the cross-border personal remittance service providers. And then banking and efficiency and players coming up to ease the burden. I mean, fintech at some level is, to deal with the inefficiency of the banks, right? I mean, that's the story generally. But off late, why India, Singapore, and why it's been really thrilling as a practitioner for myself is just the whole structuring that the Indian, I mean, last year we had 44 odd unicorns and 25 of them were in some shape fintechs. We've had 11 so far and 6 are fintechs. The structuring, there is always a Singapore leg involved in terms of, the holdco or the even opcos increasingly. So there is always, from an M&A standpoint, an India-Singapore element involved. Secondly, as Saurabh rightly mentioned, it's now a two-way street. We are seeing a lot of Indian large fintechs. Recently, it was in the news, Indian fintechs, which are Singapore headquartered, have acquired companies in Malaysia, companies in Philippines. So it's no longer just an inward story. It is very much use Singapore as a base by Indian founders, Indian fintechs. Thirdly, and that's something which I'm seeing across. I mean, we have now platform clients who may be into e-pharmacy, who may be into gaming, who may be into any digital business. They all want to plug a payment aggregator. They all want a wallet. They all want a lending license because merchant lending or buy now pay later. So it's irrelevant what is the core business you are selling or getting eyeballs on. Ultimately, your spread and your interchange is always when you do payments or lend, right? So it is a natural extension. I mean, I recall, it was unthinkable to look at a gaming company or a pharmacy company, I mean, let alone e-com as fintech. Account aggregator, sort of talked about, that's becoming a big piece. Let me quickly get into the sectors. I mean, I won't even get into digital assets. even though the certainty or lack thereof in India is it's still evolving. But the whole wealth tech space, right? I mean, for me, cryptos, digital assets, the way I'm seeing on the ground, is no longer crypto. It is crypto players getting into US equities. It is getting into global brokerage, right? Uh, Singapore headquarters, digital assets players coming to India. I mean, NFT, right? That's becoming a huge theme. Not a week is going by, when we aren't getting a ping from a Singapore NFT / digital assets player in terms of something to do with non-crypto. Either if they want to collect, apply for a payment aggregator license, or they want to integrate, fintech activities into the crypto exchange in India. So the lines are completely, the use cases of fintech that are emerging in the India-Singapore corridor are just fabulous. And I talked about the sectors. I think, unless you're in brick and mortar or in the old world chip manufacturing space, right, which used to be the tech 20 years ago, there is always an element of collection, of storing the points or the cashbacks in a wallet, trying to give a loan, a buy now, pay later to the customer or to the merchants. I won't even talk about the global large tech players, right? With some level, are they into banking? Are they into e-com or social media? Is lines are getting blurred. But one particular sector where I have particularly seen a lot of India, Singapore, both inbound and outbound, has been the cross-border money movement. The whole student remittance piece, for example. Indian students wanting to study globally, a lot of Southeast Asian, Singapore fintechs in particular wanting to facilitate, the whole money movement across borders is always a problem, especially in this space. So net, and let me pause. I think this is a topic where, and as Vivek rightly said, coming to India has never been easy. Going to Singapore from India has never been easy. And in fact, given how well regarded MAS and Singapore regulators are in India, be it our central bank, our securities regulator, or the government, it's in fact we seek out. If you have an investment advisor license, for example, from MAS, it is something we seek out. In fact, it's something which is great to be able to get a corresponding license, be it wealth or lending or payments space in India. So, Ruben, let me pause with that and see if any headline thoughts, questions.
Thanks, Anu. I do have a couple of questions if I were to get a bit into the technicality of the regulation. So two industries or two sub-industries keep getting called out. We have the wealth tech as well as so wealth tech will come in the form of B2B, it could come of B2C. So B2C could be in the form of a registered market operator, or it could be the form of, like say in Singapore, with someone like StashAway, where you can basically take in funds and then you can take in money, put in custodian, and the custody will then be put into those wealth management, those funds and different equities, which is then determined by algorithm or by robo advisors. So for those digital wealth management on a B2C, or if not on a B2B basis, or if not on a B2B2C, where they provided to the banks and then for the FIs to roll out. For that piece, as well as payments, what kind of, if they were to go on their own, what kind of license regime do they have to subject themselves to, and is it easy to get this kind of licenses, and roughly how long it take?
Great question, Ruben. And just before that, one minor footnote for India-Singapore traction is, finally we are seeing a lot of India to India M&A in the fintech space. A lot of consolidation, vertical integration, where we are seeing a lot of Singapore, either headquartered or via Singapore players, looking to pick up smaller assets in India. So that's been the other India-Singapore issue. On specifically your question, wealth tech again is a bit of a tricky space because it can cut across multiple licenses based on what you do. Is it investment advisory? Is it stock brokerage? Is it portfolio management? Is it research analysis? So activity. So depending on the activity you are looking at, you will or may trigger specific licensing from the Securities and Exchange Board of India, Indian version of the SEC. The good news is it is fairly quick and prompt in giving. I mean, 3 months is what I've seen for most credible players, and even shorter for that matter. Give and take. I mean, the whole issue is COVID and timelines kind of, don't go hand in hand. But it is a fairly easy process. The threshold levels aren't very high because these are not fund-based licenses. These are fee-based licenses. So diligence, fit and proper is far easier. Your point on payments, again, so still a year and a half back, we didn't have any licensing in India for payments. It was the most relaxed regime in the world, actually. Even US, Singapore has Singapore Payments Act, right? US has state level payments licensing, but we didn't. So you could just set up a company with $1,000, $1,500 and start doing payment processing, be in money, fund based. But now we finally have a payment licensing framework where a lot of people applied for licenses. Licenses haven't yet been given. Hopefully from next quarter, they will be given. But the answer is to be in money in a fund-based payment gateway, payment aggregation business. Going forward, you would need a license. Again, how long will it take? 3 months 3 to 4 months is a good estimate, but worth looking at case by case basis.
Thanks, Anu. Now, Saurabh, I do want to put one more question back to you because I think we did kind of address that earlier. So while it's right to say that India, in this case, as to Vivek's point, is looking at federal, so which is a good thing that you don't really have to go to state law and for differentiation. But in terms of the cities to look to go into, I mean, the default will always be Mumbai because it's the financial hub. But how about the other, and of course, Anu earlier also called out Bangalore. And so how about the other city-states that, you have Hyderabad, which is also IT hub. You also have Chennai, which is a very big city in the south of India. And then, of course, you may have Delhi right on top, and maybe on the west, you have Calcutta. How do we see all the cities? And is it right to say that, look, we view India as one market, or in this case, should potentially say, look, to all the fintech companies in Singapore, select one city first, and then take it from there. So how do you envisage this?
I think you have to select a city where you will be based. If you were to do some development and product innovation in India, you need to have a team. And it's a very good question, important question. Where will that team be based, right? And the separate question, where will you offer your services? I think in today's world, you will offer the services as soon as you are present in India. Your services will be available all the way from the north to the south, east, west, everywhere, right? India is one market, right? So presence in India will give instant access to everyone. It's a huge market. There's no state-wise restrictions or city, or doesn't even come to the picture whatsoever. Now, presence in India, I have found most of the fintechs very happy being in Bangalore because there's an ecosystem, there's a huge supply of talent, and the vibe is there, which suits them. So most of the new market entrants quite naturally gravitate towards that. But then that's not the only place. As you mentioned, Hyderabad is a good place. Gurgaon is a very good place, which has a decent ecosystem. And Pune as well. So some of the smaller towns. We found some entities have taken a very interesting call to be in slightly smaller cities like Trivandrum and so on and so forth, which are coming up. And just to very briefly explain why they do that so that they don't have to deal with the churn in their tech capabilities. I think tech capabilities in their high demand, and many entities see a lot of churn. And so if you are in a slightly smaller town where you are very attractive to the talent, you just stay there rather than being in a place where you are one of hundreds and the churn is high. So that type of decision also is taken. So there are choices, but there are not too many choices, and the pros and cons are very, very clear.
Thanks,
Ruben. And just to add to sort of, I'm seeing Chennai, I'm seeing Ahmedabad. Some of the latest unicorns in India in the fintech space have been from Chennai. So actually, this question is a very individual one. It's basis your, what kind. So if, for example, you are in wealth tech, right, which is securities market. I'm seeing folks set up in Mumbai because your regulator, SEBI, is in Mumbai. Insurance players, insurance tech, because the regulator is in Hyderabad in India. I'm seeing a lot of those players in Hyderabad. Big tech, if you see Gurgaon, I mean, it has got so many fintech unicorns. It has got all your large tech, global SF, Fangs to Bats to Mansa, call it whatever, Mama, call it whatever, right? All of them are headquartered there with also a dual office in Bangalore. So truly, it's availability of talent. It is a lifestyle call. Where can you get people to come and relocate? Cosmo nature of the city. Language is an issue, but otherwise, I agree with Saurav. I don't think it's really a city by city. You can have 10 options to pick from when you come to India city-wise.
Now, maybe I just want to add on, maybe I'll put that to Anu and Vivek as well. How about hiring then? Because it seems like where to land depends a lot on the hiring. So we talk a lot about talent, but how about the process in hiring?
Yeah. So look, I think one of the good question, because employment and labor laws in India are in fact both federal and state. I mean, you have a lot of state level legislation as far as employment law is concerned. So one is finding the right talent, and that's a big driver, as Anu and Saurabh were saying, as to where do you locate. I think where the market is may not be so much more relevant anymore for tech players, because their market is really everywhere. But where the talent is, I think, is key, and maybe where the regulator is. But getting some states are lighter on labor law and regulation. Most states are more or less the same. Some states are a little lighter. That may or may not match with your requirement as to where you find the best talent, etc. So you have to, unlike Singapore, and I'm just taking this more from a Singapore-India perspective, this is one area where you will find a lot of regulation. Indian employment laws are, we don't have a hire and fire policy. There is no at-will employment at most levels. And therefore you will have to, be very clear on the employment laws and regulations that you're going to deal with. As far as it's very similar to what you would have, let's say, if you were doing it in Japan. Very employee-friendly laws. Japan and California in the US, you talked about San Francisco. Laws in some of these jurisdictions are very employee-friendly. So India follows that basis. But having said that, the technology talent is obviously abundant. There is a high competition for it, and therefore the price that you pay for that talent is higher, and the time that you will spend in strategizing, especially if you're going to be recruiting a lot of people, as to what the laws and regulations are, will be very important. And so that's one area where I think India still has some way to go to reform, though some states like Rajasthan and others have, in fact, in the tech space, undertaken a lot of reform as to the inapplicability of a number of labor laws to employees in certain sectors in some states.
Thanks, Vivek. Now, Saurabh, I do want to pull one question to you right now before I hand over to Anu to continue. When it comes to, we talk about wealth tech and payments. So payments-wise, we spoke quite a bit on payment service provider, but how about ecosystem player like payment wallets and super apps? So how do you see this piece coming up along in India? Because unlike in ASEAN, every ASEAN was made up of 10 countries in Southeast Asia, and yet every country has their own payment wallets. But for whole India, how many wallets are we expecting, and where do we see these opportunities for players in Singapore?
That's a good question, Ruben. I think a very important point is that with the implementation of successful implementation of UPI, the business case of wallet has become, almost, unviable, right? So there's no need to have a wallet in India, or even if it is there, it is extremely very, very narrow use case. So we do have wallets for very, very specialized use cases, but none of them is, is an interesting business model that I think should be of interest to anybody in Singapore. Because we have got UPI, anybody can transfer funds from his or her own bank account anytime, and the experience is more or less the same as if it was a wallet from where you were transferring money. So that's the revolution. It's actually truly a revolutionary experience, right? So wallets have become, so most of the players who were wallet service providers actually are integrated to UPI. And that means that, previously I used to transfer money from my wallet to somebody. Now I will use the same app, but transfer money from my bank account to wherever I was going to transfer. So that's number one. Number two, and this is very interesting for point about regulation and how Indian regulator is slowly and gradually opening up to the idea of fintechs becoming dominant, is that just very recently the regulator opened up the interbank payment infrastructure to people who just had a prepaid wallet license. Right? So you don't have to be a bank to have an access to the UPI framework. So you can actually take a license to be a prepaid instrument service provider, which is a wallet, but then you actually can then integrate into the UPI framework and transfer money in and out of your wallet through the from any bank account in the country. That's a very big thing, because without a banking license, you can offer your customers more or less an experience of keeping significant amount of money, which is about 200,000 Indian rupees at any given point of time, with just a PPI license. Right. So that's one dramatic change. And the other change that has been, I think, is being contemplated or more or less there now, is to allow entities which do not have a banking license to actually offer credit card. For a very long time, credit card was a service which was not allowed for anybody who doesn't have a banking license. That game is over. Now, if you're a fintech, you've got a non-bank lending license that is much easier to get, and you can actually start offering credit card, which is a highly under-penetrated product, massively growing, and the entry is very quick, and so on and so forth. And so, together with credit card license and an ability to integrate to UPI with just a prepaid instrument license, one can actually create quite an interesting set of products and services, which can cater to something that previously only banks could do. So that's a very interesting one. Now, ecosystem is a very ecosystem is a hot word. A lot of people think about it. It's a very difficult thing to pull off. I think most financial institutions imagine that they have to somehow integrate into an ecosystem for better customer acquisition, and they are looking at also potentially better customer experience for their own existing customers. But for a large country like India, to create an ecosystem is tough. And it's not easy for financial institutions to just pull it off. It's easier for them to integrate into other natural ecosystems. So obviously, large business houses in the country, Reliance, Tata, they are all working towards creating major ecosystems, but nobody is close to creating something yet. But I think that's where they are heading. You obviously have large e-commerce players who have a pretty solid ecosystem, and they are a primary target for most financial institutions to integrate with them for, BNPL and other form of customer acquisition platforms. We don't really truly have a true super app yet from the country, but that's something that many people are trying to get at, and certainly financial institutions are thinking about it. But it is one of those things which will take time.
Thanks, Robert. Now, can I also give this to Anouk and Vivek as well? Any thoughts on this part?
Anouk, over to you.
Thank you, Vivek. So, Ruben, so both of these have been extremely interesting topics. There are multiple acquisitions in the wallet space. We are doing multiple. We have closed many licensing applications, and what Saurabh said is correct. I mean, one point where India has been accused globally is flip-flop on policy. I think wallet is one classic case where, depending on which 5-year cycle you pick, the regulations tighten, or so we probably are in a good wallet regulatory cycle. Rules were changed in August of last year. In 2017, wallets were made almost redundant because it became a full KYC wallet. I mean, which kind of, even for a dollar to go into the wallet, it required bank-like KYC. And interestingly, the gentleman who had the regulator led this project is now a senior advisor with us. I keep telling him how the growth of UPI in some way was his creation, because wallets till a point of time were the main way to send money. But now what's happened is, with the change in law, a wallet is up to a $3,000 banking product. It is fully integrated in the banking world. A small KYC wallet concept has come out. There is cash out permissible, so it can act like a card, which is a huge plus, which wasn't the case earlier. The entire buy now pay later rails are being built on wallet, just in time lending, a non-bank, a lender lending into a wallet just in time before you check out on an e-com website. So the entire BNPL rail is a wallet. So right now is good times. Wallet holders are having the best time, because it's a very limited. There are only 20-25 odd licensed wallets in India. So suddenly, after the change in law, the M&A valuations have gone through the roof, because to apply for and get a new wallet license still is a 10 to 12 month process in India. But on the super app point, which is probably the more interesting one, I mean, there is a race all over towards a super app, especially in the financial services sector. I mean, we've been involved in, I won't say creating, but you can see the product is a super app construct. I mean, what's a super app? You have a primary activity where you get customers and you build in various use cases, right? So we are seeing a lot of it in, I mean, of course, there are monoline players who only do one kind of activity, especially the insurance aggregation, because that's heavily regulated. You can't really build in other use cases from a cross-sell standpoint. But generally, we are seeing every credible fintech player, and by credible I mean large. I mean, not a function of credibility business-wise, but more a size issue. Looking to build in a lending, a wallet, a data pot, wealth stack, somewhere in insurance and e-com, payments. And e-com is a broad term. It can have multiple kind of use cases. So net, how do you really capture the 1% of the population, which is the real, revenue generating audience in India, and sell them as much as possible through a common app? And of course, crypto is the other future, because at some level, everybody's waiting for clarity on this topic. And if clarity comes, I won't be surprised if we have a lot of the existing super app type apps integrating digital assets. So exciting times on the super app front.
Thank you. Thanks, Anu. Thanks for that. Thanks for that explanation as well. And I heard BNPL being called out a number of times. So maybe I just want to spend the next 5 minutes to invite the speakers to share a bit more about this product called Buy Now Pay Later. How is that picking up in India, and who are the kind of players, and are there collaboration opportunity in it? Because you see, this is an expansion series, so I'm mindful that every product, every trend that we get called out through this fluid conversation here, I want to explore what are the possibilities for Singapore companies that can potentially either enter the market for, or potentially collaborate with someone in India to work on it.
Sure. I think BNPL is something that has been growing quite rapidly. It has caught everybody's attention. And while there have been some noise from the regulator about having a closer look at the model just to make sure that it's not creating certain systemic risk, etc., then by and large, I think there has been a very solid growth in the market with a lot of players entering. There are obviously financial institutions, banks themselves are doing it. But some of them, most of them, don't have the capability to integrate to e-commerce in the same way that is required to address this opportunity. But we notice a number of fintechs actually jumping into this opportunity to create BNPL offerings. And some of them operate on a card platform. Some of them are operating on the UPI platform through the prepaid instrument route, and so on. So a lot of interesting innovation is taking place. So certainly, if there is a BNPL player in Singapore and they were to look at the Indian opportunity, I think it will be looked at as a large opportunity which requires serious consideration. I would like to add that I think there's one generic point, and there was some question on the chat as well. Indian opportunity is always very large, it's always very attractive, and almost always there are so many reasons why you should enter India, but still India doesn't work out for people. And I have many clients who look at the presentation and say everything here is fine, but why are we not successful? And it is and one common reason is that India is a complex, large country, which has also a large number of stakeholders with multiple push and pull going on in a reasonable democratic setup, and that leads to policy volatility and so on and so forth. So while the long-term direction is there and it continues to go in the right direction, there's always short-term volatility. Similarly, why India is one market from a regulatory perspective, from a license perspective, I mean, different markets require a presence on the ground to make it work, and appreciation of the local situation. And all of this ends up meaning that players who are successful in India, they require a significant commitment to the Indian market to go through the hoops, to learn the requirements of a different local situation, to deal with the delays and not get concerned about it, to keep the commitment, and to also invest enough management attention. I know that there are many people with deep pockets to invest, but they run out of management attention when it comes to Indian opportunity. And the management attention is required because you need to get so many pieces of the puzzle right to make it work, and you need to hire local talent also. And local talent, you probably make a couple of mistakes before you land up with the right talent and dynamics and their relationship. So that is really important. So yes, BNPL is great, but it will be a very large opportunity in India, and one can make it work because you start with BNPL, then you migrate into other value aspects of the product to make it substantial. One can also provide this service to a lot of banks who might be interested in servicing BNPL to their customers, right? So that is also possible. So absolutely, there is no question about it. I think the question is of it's a 3 to 5 year program to embrace the market and make it big in that market. So the size of the prize is large, but the effort requires a large, and I think that is a very important fundamental requirement to be successful in India. And I think this program is not successful unless we very carefully but very powerfully make that point that India is ready to be embraced, but it requires commitment.
Thanks, Saurabh. I would also like to seek feedback from Vivek and Anu as well. And also, not just only from the business opportunity that you see, but perhaps also shed a bit of light in terms of the regulation, because right now it seems like everyone is able to provide that service. But do you think the regulation will come down hard on this particular product later on?
Anu?
Thank you, Vivek. Ruben, great point. I think, let me just pick up from where Saurabh left off. What it takes to succeed in Singapore, in Australia, in Europe, in US, same it takes for a foreign investor to succeed here. I mean, there is really no overnight gold rush, right? Financial services is a long-term commitment. You need to have credibility. It's a business of trust. So automatically, when you're competing with folks who have a different market reputation, right, which is a function of lineage, it will take time. But I can tell you the ones who have, look at foreign banks. One just needs to do a study of the profitability that foreign banks have made from India. It's upwards of $1 billion and more for many global foreign banks through just a branch model in India. Of course, it's taken 20, 30, 40, 50 years. But the point I'm making is it is a commitment. The way it would be a commitment if I were an Indian founder, Indian unicorn owner who's looking to go to Gulf or Europe or US or Singapore, right? on the point of BNPL in particular, globally it's in a flux. And we are engaged a lot with the new department that Vivek mentioned about earlier on this topic. So without getting into specifics, look at the route in Australia. Look at what's happening in Europe. The almost $40 billion acquisition of Afterpay, the Klarna acquisition. So this is a space which, BNPL is a bit of a new wine in old bottle. If you really break it down, it is merchant credit, it is lending tie-up or a bank tie-up, right? Or it is going out of pocket yourself. Third one being a risky one because that's very gray. But it's not like today we don't have laws to regulate the activity. Forget BNPL. What's the activity we're talking about? And there is already a lot of regulations. Now, how it gets dealt with, again, there are multiple ways the regulators can just tighten. And by tighten, I mean there are always good actors and bad actors. And the problem with any industry, more so in BNPL, where collection practices, usury regulations, interest charge, all that can become a huge issue, right? So all regulators have to do is ensure bad actors are controlled and the good ones are allowed to prosper. But I don't see a reason why anybody, we had Zipco investing in India's largest BNPL player last year, a significant investment. We've had some of the largest European American BNPL players looking at doing significant foreign investment in India, either greenfield or brown. So point I'm making is it's an obvious choice to look at India BNPL, and anything which is new will have regulatory uncertainty. But net, if anybody is looking at sustainable long-term business, be it BNPL or any other aspect of fintech, there's a reason why India is one of the largest open markets in the world, right?
Absolutely. Yeah, right. And like I said, in the starting point, it's the third largest market, especially for fintech. So if it's after US, if it's not China, if it's not US, probably has to be India then. Vic, would you like to say anything like to add on to this?
No, I think everyone has covered so many questions. I think we've covered a lot of ground, but I would like to just echo to what Saurabh said, and it reminds me of a discussion I had with a Japanese client and a Korean client as to how it's important, quote unquote, to get your hands dirty if you want to be successful in India. There is no remote control outsource model of doing business in India. You have to be on the ground, and if you look at the auto industry as an example, the Koreans and the Japanese, they did that fairly well. They actually got their hands dirty very, very early on. And over the long run, they've been very, very successful. One of them has the largest market share in the country of automobiles. So yeah, I just say that it's a great market. It's definitely a land of opportunity. And I don't participate in webinars where the word challenges comes. A lot of people try and say that it's India, how to overcome challenges. I refuse those invitations. Land of opportunities is correct as long as you understand the challenges and you're ready to commit, as both Anu and Saurabh pointed out.
So, and Vivek and Ruben, I think one point which often is missed in these event sessions when people look at India, we are a rule of law based system, right? Now it may be, of course, rule of law, democracy has its own challenges, right? But ultimately, I am yet in my 16 years see any particular client of mine or general global investor not getting the benefit of the rule of law. Whether it is at the federal level, state level is a different matter. But the point I'm making is, and you can just look at any dispute, investor dispute, or including involving with the government tax. We all saw the whole investment arbitrations. Ultimately, each one of them, the global investor, if you go with the rule of law based approach, if you've taken proper guidance, if you've done a thought through entry in the market, there's no reason why you wouldn't do well in India.
Thank you. Now, I'm mindful of time, gentlemen. What I'll do right now is, before I close it up, I'd like to invite everyone to just give me one piece of advice. So one piece, if you're meeting an investor in Singapore right now who's looking at Indian market, what is that one line that you share with him? Let's start with Sabra, please. Sorry about that.
Take a long-term view and commit to the market.
Vivek?
Slightly self-interest comment. Make sure you have good advisors.
And Anu?
I was going to say the same thing in a different way, Vivek. Right partners, right advisors, people who want you to succeed in the country. And, like in any new market, finding the right partner can be a bit of a make or break. I'm reminded of Phil Knight's, autobiography, the Nike founder. If you see how Nike started in Japan initially, right? Or, for example, look at the Blackstone story, how Blackstone, started and they had the Japanese partnerships initially. Ultimately, to get your first partner when you come to go to a country can mean whether you have a lost decade or a great decade in that country, both in terms of business partner, advisors, and people in general.
Thank you for that, gentlemen. Now, if I would just want to quickly sum it up what everyone's been sharing, there has been a lot of exchanges here, a lot of great truth, a lot of great insights here. But just want to call out that, importantly, India is a huge market, and India is a market of opportunity at this moment. And unlike other regions where you potentially have to look at separate markets or in one country, India is one that you can actually view on a totality. And where you put your where you set up your base, quite a lot boils down to where do you see your market is, where do you see the regulators are, depending on what regulations what license you need, or if not based on the talent as well, where do you find the most number of talent pool. But importantly, once your product is in as a fintech, you can scale within India relatively easily. So instead of seeing as a different markets in different states, India is one market. More importantly, as all my three experts I shared earlier, hanker down. If India is a market that you want to go into, please bear in mind that it's a huge country with a 1.1, 1.2 billion people, with many states. You do need to put your foot down. You do need to stay. You do need to have the management accuracy and attention there, so that you can persevere and see through this. But nevertheless, there's a lot of market, there's a lot of opportunity there. A few of the sub verticals we have called out so far are wealth tech, payments not just only in terms of payment service provider, but then there are some elements, maybe lesser of wallets now with UPI coming up very strongly. And last but not least, also buy now pay later. Now, with that, gentlemen, and to all my audience, thank you very much for your time. If this is a physical session, I will invite everyone to give a standing ovation to all my three esteemed speakers right now here. So, gentlemen, thank you very much for your time. And before we go off, I just want to invite everyone to take note that we do have a survey after that. And to all those attendees who are looking out for partners, let us know. Drop us a note. What kind of partnership you need? We have folks from CAM, we have folks from Boston as well as Fiki, who will be able to then connect us to the right partners later on for more discussion. Bearing in mind that at all business expansion series that we hold at SFA, it's not just only the awareness. What we are really going out for is that real tangible result where we connect you with right partners overseas, so that you can increase the chances of you succeeding in other countries. All right, with that, thank you very much, gentlemen. Thank you for your time, and thank you, everyone.
Thank you, Ben. It's such a pleasure.